Central Bank Action Week. You've got Bank of Japan, Fed and BOE. So in the central bank land, it's going to be a very, very busy week. For our own markets, we've crossed the recent high of 22,676. And from the recent low, just last week, the Nifty had gone below 22,000. So very swiftly. And the low that day was 21,965. So from that level, we've advanced close to about 850 points. The mid-caps have advanced close to about 5% from their March lows, and the small-cap index has advanced close to about 7% from its March low. And we've broken out of this consolidation. The Nifty was trading between 22,300 to 22,600 for the last couple of days, and today it is higher. And it helps that banks and IT, both those leadership sectors which carry the maximum heft, are doing well today.
Absolutely. Banks have been leading from the front. I mean, look at that Nifty bank chart, almost 2% higher. Let's pull up the Nifty as well, Nifty Financial Services, because it's not just banks. Even non-banks have had a pretty decent session for themselves. Obviously, the big deal in the insurance space has been the talking point. So there you see, beyond banks, overall financials as well, it's a very, very healthy looking screen. And IT at least is no longer as big a drag as it used to be. So that's a point that Rima made. It's a point well taken as well. I also want to talk about the fact that this is a bit of a global rally in nature. I mean, if you're looking at the Hong Kong market today, the Hang Seng, by the way, has been up over 2% once again. So global markets have been looking fairly firm. And India is absolutely in step with that. It's among the leader markets today. So Hang Seng is up 2.5%, and we're looking at smart gains of about 1.2%. So solid performance. On mid-caps, just to give you a bit of a flavor and a texture of the kind of move and momentum that we're seeing. Okay, let's look at the price plus volume charts and what's topping it. Zomato is up about 6%. Aircon announced that one of its joint venture partners has won a big order from the government of Meghalaya. And Aircon has been up and about right from the morning. Beyond that, even non-news stocks, I mean, Sri Renuka, there is Bajaj Hindustan on the sugar side doing really well. RBL Bank in Tier 2 financials is having a great session for itself. Actually, financials, like I said, look at 361 Wealth Management, 7.5% higher. PB Fintech, of course, we'll tell you more about our conversation with the company today, but that stock's up about 6-7%, looking very, very good. Ola Electric is undoing a lot of yesterday's price damage. Ola is surging now 12% higher, but it's a very, very beaten down stock. So short point, there's a lot of flair in the market, and that advance decline ratio is looking fantastic. There are over 4 stocks advancing for everyone that's declining at this point in time. So how should you position yourself for this last hour when momentum is so strong? Well, let's ask Mitesh. Mitesh, it's a real green afternoon after a long time, right? Across the board, a higher up move. What would your advice be now? What are the trades?
Yeah. Good afternoon. So, I've been advocating that we will possibly move higher and test 22,800. We have done that. The high is 22,798, so practically it's there. What we've done is that we kind of flipped positions, taken profits on the long which we were carrying, and now waiting for 22,8, 10, 15, 20 to be taken out before adding on to fresh long positions. So take some part profits, but stay long. There is one important thing which I want to point out, that today was a gap up day, and there was no attempt to fill the gap. So 22,600, which is where the gap is, that becomes your stop loss, which means that any 100-point decline should invite fresh long positions. So take some profits over here, either buy about 22,820, 825, or add on a 70, 80, 100-point kind of a decline. I think that's the way we'll approach it. And on the stock side also, in the morning, we have all longs. Right now also, my recommendations are all on the long side. PFC is a buy with a stop at about 395 for targets of 415, 420. And Bosch is another one which is on my radar. Sorry. Bosch is a buy with a stop at 27,000 for targets of around 27,950.
Got that. M&M, top Nifty gainer today. Anything that stands out in the charts today, Mitesh?
See, M&M also, like other stocks, was extremely oversold, had done the correction, is now giving first signs of reversal. There is a modified moving average which comes in around 2820. So maybe it's not a good entry point right now. If you had bought it yesterday or maybe today morning was better, but now people can take some profits on 2820, and beyond that, once we see a breakout above that, then I think there's a good chance of stock heading towards 29,53,000. So positive view, but tactically not the best entry point.
Got that. There are just 4 Nifty stocks in the red. One of them is Reliance, which is practically flat. You've got a Tech Mahindra. You've got a Bharti Airtel, which is declining nearly 1%. That could be because of that FT News report, which talks about Sunil Bharti Mittal possibly weighing or considering increasing his stake in British Telecoms. So the street fears that money will be pulled out. He may have to sell his stake. in Bharti Airtel if he has to fund incremental stake in British Telecom. So that news piece could be weighing on Bharti Airtel. And the other one is Bajaj Finserv. That is the big story of the day, and the stock is down 1.5%. Now, Bajaj Finserv and Allianz have parted ways after a 24-year partnership. Bajaj Finserv and the promoter entities will be buying out Allianz's stake in the life and the non-life, the general insurance joint ventures, and they will be spending a little more than 24,000 crore rupees. Sanjeev Bajaj, Chairman Managing Director of Bajaj Finserv, told CNBC-TV18 the deal is a win-win for both partners. Yash is here to tell us more about the deal and get us the key takeaways from the conversation.
Well, it's certainly a large shake-up in India's insurance sector with the news that Bajaj Finserv and its promoter companies would look to acquire the entire stake from Allianz in the life and the general insurance JV. We spoke to Sanjeev Bajaj, the chairman and the managing director at Bajaj Finserv, and here are the most important takeaways from that very crucial interaction he had with CNBC TV18. The first one was with respect to business. Sanjeev Bajaj stating very clearly that it would be business as usual even after the transaction is concluded, with respect to the products, with respect to distribution partnerships, also with respect to the on-ground strategy in terms of acquiring business. All of those aspects would not change and it would be business as usual. The second one was with respect to having a potential new partner or a new investment in the insurance JV after Allianz's exit. Sanjeev Bajaj again very clearly stating that both insurance entities, that is the life and the general insurance entity, are mature enough to go solo in India's insurance sector, and they would not look for a new partner or a new investor when it comes to both businesses. In fact, he pointed out that in India, insurance companies with a single owner have been more successful as compared to otherwise. The next one was with respect to public listing or IPO of Bajaj Allianz General as well as Life. Sanjeev Bajaj acknowledging the fact that the insurance regulator has been nudging insurance companies to consider public listing, but as of now, at this point of time, according to him, that moment for Bajaj Allianz Life and General is still some time away, but it will come under consideration. But FY27 could be a little early when it comes to consideration or a decision on public listing of the insurance entities. The next clarity which came from him was on the non-compete for Allianz. Sanjeev Bajaj stating that once 6.1% has been acquired by Bajaj Finserv and its promoter companies from Allianz, only then, Allianz would be free from the non-compete agreement and they can then choose to invest the capital which they receive into their ambitions, the insurance ambitions in India. The next one was very important, and that was with respect to the leadership at Bajaj Allianz Life and Bajaj Allianz General. Very clearly stating again that, there won't be any leadership change when it comes to both life and general insurance entities, which means Mr. Tarun Chugh, who's the Managing Director and CEO at Bajaj Allianz Life, and Tapan Singhal, who's the MD and CEO at Bajaj Allianz General, would continue to lead both entities. Finally, as far as growth is concerned, as far as, that setup of India's growth and the insurance growth is concerned, Sanjeev Bajaj stating that both companies would continue to outperform the growth as far as the general insurance or the life insurance industry average growth is concerned.
We are very clear that given the capabilities that have been built in both our companies now, almost 24 years old, both the companies are perfectly capable on going solo. Effectively, as I said, the board has been running both the companies, a board that is controlled by Bajaj, and with the right support from Allianz as and when required, but fully empowered board and management. And as a result, no, we don't need another partner. If you also see the Indian insurance space in the last decade or so, this is not new. There have been multiple companies, including most of the leading companies, where the Indian promoter has gone solo, and most of those businesses have actually even done better. The regulator has been engaging, especially with the larger, older insurance companies, to talk to them about the possibility of listing, to put a glide path and timelines towards that. This is something that has been taken up by both our boards as well. And as a result of that, the board at a suitable time will consider the nudge, as you said, from the regulator. I think FY27 is early. The board and the management has been fully involved. Well, the board and Allianz as Finserv as a shareholder has been fully involved in the current transaction, and the management will now roll out the necessary changes. So for us, the next year or two is going to be busy with this. I believe at a suitable time, the board will seriously evaluate IPO as a possible option for both the companies. Once the first tranche of the shares are bought by Bajaj, post all the naturally regulatory approval, the cancellation of the JV and stuff, we release Allianz from the non-compete, so then they're free to go ahead and get into binding agreements in India. This was their desire and one of their asks, and we completely understand that as a large player. And that's why I think the discussions, the negotiations have been such that it's created a win-win on both sides.
All right, that's Sanjeev Bajaj spelling it out in terms of the road ahead, and they're going solo. He's clarified that, and very confident of boosting growth from here on as well. The stock, let's pull up a longer trajectory for the stock. Bajaj Finserv in the last 1 year is up about 16%. Finance is up about 33%, so Bajaj Finance. So those are the twins which are part of the Nifty. Deepak Shenoy is with us now. Deepak, great to have you on the show this afternoon. So the deal is done. The body language, the commentary, all of that is extremely confident. And yes, there's commitment. I mean, he's right. When you're pumping in close to 24,000 crores, you definitely believe in the business, right? But what's the sense? The road to listing is still a while away. That's what we clearly picked up in that conversation. So what would you do with the Bajaj Finserv as a stock now?
So Finserv actually has two other levers beyond finance. One is the insurance piece and one is the mutual fund piece. So I think from that perspective, they are a holding company and eventually will get valued as one if they list all their individual arms. We're more interested in Bajaj Finance because I think the time for a broader recovery in credit is here. And a few of the NBFCs that seem to be better capitalized are in the right spaces actually will do well. So we have an interest there, but not so much in the insurance arms. I think the insurance still, we're seeing, penetration not moving significantly in life. Movements are more coming in the health insurance space, but competitive intensity is also quite high in health. So I think things are changing there quite rapidly as well. I would say at this point, I'm positive about the insurance industry, but specific players I would not want to overpay for. Within insurance, we have an interest in LIC, and I think that's relatively cheap as a play at 9 times earnings, and potentially earnings growth is going to be quite high this year and the next. Allianz, Bajaj Allianz, for instance, has about a 9.75% new business premium growth. That isn't meaningfully high for a company whose parent has a growth expectation of more than 20%. So I would say at this point, not quite keen on the life insurance space. Within health, I think the space will move rapidly, but player profitability will reduce because of increased competition. So I'd rather wait and watch on the insurance space in general. We're positive on Bajaj Finance. So as a result, we're kind of positive on Bajaj Finserv as well. But that's not because of the insurance arm.
And on Bajaj Finance, there was so much uncertainty about what happens to Rajiv Jain, who's the current MD, whose term comes to an end on 31st of March. And Sanjeev Bajaj did provide that clarification that he's very much committed. Rajiv Jain is very much committed to the business and the group. We'll get Nimesh to talk more about it. But by the way, look at the markets. The Nifty has now touched 22,800. Our team points out that this is for the first time since 21st February. So that's nearly a month. And mid-caps, MobiKwik, 20% up move. It lost 7-8% yesterday, but it's added 20% today. Mastech, the IT name, is up close to about 16%. Raymond, big volumes, 15% gain. Triveni Turbines, Ola Electric, PB Fintech is now up nearly 7%. Paytm is another big mover. So it's the moves in the mid-cap space are absolutely phenomenal. But let's talk about Bajaj Finance. That's a stock which even Deepak likes. Nimesh is now joining in with more.
Well, Rima, same time yesterday I spoke about some scenarios for Bajaj Finance and how it's going to be a bit of a binary event. And that's exactly what Sanjeev Bajaj did confirm to CNBC-TV18 in an interview today. One, he said that Rajiv Bajaj is going to continue with the group. So that's been positive. And two, in the next 2 days, there is a board meet, and then there will be a clarity on what Rajiv Jain's new role is going to be with that group. So that's the clarity now. In the next 2 days, we'll hear from the group on what Rajiv Jain's next role is going to be. In fact, Morgan Stanley put out a note yesterday, and they had identified 3 scenarios in which this can play out and how it can impact the stock price. The first scenario is that Rajiv Jain continues with Bajaj Finance in some capacity. In that case, Morgan believes that it can have a potential upside of another 5 to 10% in terms of stock price, even after the recent rally. That's the first scenario. The second scenario is that while he continues in some fashion in Bajaj Finance, he takes up a larger role in Bajaj Finserv. Even in that case, Morgan Stanley believes that there could be a potential upside of 5 to 10% for Bajaj Finance. The third scenario, which is a very less likelihood of that scenario, which is where he leaves Bajaj Finance completely and only focuses on Bajaj Finserv. In that case, Morgan Stanley believes that the stock can react 5 to 8% on the downside. So clearly, as Sanjeev Bajaj put out, that there is a board meeting in next 2 days. So there will be enough clarity on what exactly the role for Rajiv Jain is going to be in Bajaj Finance, and also the entire rejig of the new MD and CEO for Bajaj Finance will get announced. It's been a process which has been on for a while. So there is not going to be a big negative surprise or a big surprise, so to speak. But all eyes will be on what the role Rajiv Jain will take up in both Bajaj Finance and Bajaj Finserv. If it's only in Bajaj Finserv, then you might see a bit of a negative reaction. So it's a kind of a binary event to watch out for. But that's something which even Sanjeev Bajaj said that is going to continue with the Bajaj Group. So at least that's a relief. What role is something we need to watch out over the next couple of days.
Deepak, I know you like the business of Bajaj Finance, but how critical is the leadership issue at Bajaj Finance, the role that Rajiv Jain takes on, to your mind?
No, he's done a stellar job. I think anybody who's been with the company or watched the company over the last decade will say that there's been a phenomenal focus on data-driven acquisition of customers, risk management. They use a lot of work, stuff within AI and within a lot of the other concepts to make sure the business runs smoothly. Though, honestly, the downside has been you get too many calls. But, the idea would be that the successor to this business will not try and come in and change any of this stuff. It'll probably enhance more of this. We'll have to see who it is, or whether it is Rajiv himself or somebody else will come and continue it. I think the organization is very large, and I think they've set up a system internally that allows them to kind of benefit from all the stuff they've learned. I don't think, therefore, that a management change will be detrimental to the business. And I would typically anyhow give new management a couple of quarters to define their vision or change in the thought process before I take a call on it. So in general, I don't think this is such a small business that is only like CEO-led vision. They've imbibed this vision through the company itself and through their risk management practices. And I hope that it doesn't result in a stalling of growth, because growth has been their primary reason for us to purchase the stock in the first place. But I think if you look at the macro factors, the fact that Bajaj Finance is well capitalized, it has the ability to grow. RBI has now reduced the risk weights on NBFC loans as well. That means they want unsecured loans and NBFC loans to grow. I think they will do well going forward as Bajaj Finance itself. I don't think if Rajiv leaves, that it will be a big problem. But I don't want to make any assumptions on it. I'd still give anybody 6 months, even if it's somebody new.
Okay, all right. So we spent a lot of time talking about Bajaj Finance and Finserv in this group. But before we go, it seems, overall, I don't know, again, don't want to talk too soon, but it seems like the market's finding its feet again. So Deepak, give us some ideas. 1 or 2 ideas. What have you been buying in the fall? Something that's looking good now?
Yeah, honestly, we've been buying more to our portfolio companies, from large caps to small caps. Bajaj Finance is one, L&T is another. We've had the smaller caps also, likes of say Pennar Industries, companies relatively small. We have some small positions in the consumption space in the form of intermediaries like car trade. We've been actually adding on to a few of these positions, doing a little bit of portfolio rejigging, if you may. However, the core themes remain strong. I don't see a slowdown in India that's meaningful. We've still focused more on a surging India portfolio, which means companies that are focused on selling and manufacturing in India for India. So a lot of the defense and manufacturing companies still remain on our radar. We've been buying a little bit more of the NBFC, I mean, starting with Bajaj Finance, but a few of the others as well. We've actually, added more to our positions in some of the small caps. Because small caps will fall 40-50%. That's the way markets are. So you have to add to good companies at an opportune level, and let them kind of build into their growth story over a long term. So I've been, I've not been extremely bearish, but it's easy to get excited with the markets of 1%. This is too small an upside for us to say that this is the bottom. I think we're going to have a volatile few months at least from now. So we should assume that there will be more juicy points for picking stocks. So build the portfolios in the same way, just wait for the right prices. I think that's the only thing I can say. I don't think I'm very excited about today being like a big up day or a change in direction, really.
Okay, but well, it's human nature to get a little excited, Emotions, we have to keep at bay, but they happen nonetheless, right? It is a green day. It would be making investors quite relieved, traders quite relieved after a long time. Thanks very much, Deepak. Always a pleasure having you on the show. Thank you for joining in. That's the view from Capital Mind coming in. Have to take a very quick break. Markets looking rock steady and solid, almost 300 points up on the Nifty. As we take the break, here is some news for our viewers. India's business news leader is now just a click away, introducing CNBC-TV18's all-new app. You can get instant access to breaking news, in-depth articles, and financial world updates and analysis at your fingertips. Download the app from either the Apple Store or Google Play, or you can just scan the QR code on your screen.
Welcome back. Half an hour to go, and the Nifty is now above 22,800 for the first time since February, 21st of February. And the Sensex is 200 points above that 75,000 mark as it's raced away with a 1,000-point up move. Big day today. The other big story is PB Fintech, and the stock had fallen, remember, about 10% over the last 2 weeks after the company announced its plans to invest nearly 700 crore rupees in its subsidiary PB Healthcare Services Private Limited in the next financial services to expand their operations. Today, the stock is higher by 7.5% at the day's high. We spoke to Yashish Daya, and he said the primary objective of the shareholders agreeing to participate in PB Healthcare must not be profit. There was a chance that the new venture could fail. Listen in.
There is an investment going in of about 2,000 to 2,500 crores from various investors. Many of them are pure financial investors, and they have no reason to invest except for the financial return they expect to make out of that. I don't think it is for everybody and anybody, for the entire market to agree on what is the return they expect from that. They believe there is a return, that's why they are investing. A bit like when InfoEdge invested in Policy Bazaar way back in 2008. Many people believed it was not a great financial investment. They have made about 100x return. So I would say let them who are putting their money be the best judge of whether putting their money is worth it or not. I think by the time round 1A and 1B are over, because it's done in 1A and 1B, I think PB Fintech would be down to about 25-26%. And from a strategic perspective, because I know who the other investors are, I do not believe PB Fintech is the long-term strategic driver of this project. It is at best an incubator and a catalyst. It is not the long-term owner of this project, and nor is it the long-term driver of this project. At least two of the investors coming along are much more in that category than PB Fintech. As of now, I don't envisage PB Fintech investing anything further. Now, what that means is, if 1 year down the line we raise more capital, PB Fintech is not participating, so of course it will get diluted. How much we will raise, I don't plan things to that level of detail right now. Right? We are raising enough capital for the first 3 years, but that does not mean we will not raise more capital. I think there is a 50% chance the project will fail. There's a 50% chance it might succeed. If it succeeds, it will be very big. When you talk about PB Health, it is there is an investment going in of about 2,000 to 2,500 crores from various investors. Many of them are pure financial investors, and they have no reason to invest except for the financial return they expect to make out of that. Like in any agreement, you cannot disclose people till the deal is done.
Okay, well, that is Yashish Daya, outspoken and on the front foot. When we had that conversation, the stock was up 2%, and now it is the stock of the day with about a 7.5% move coming through on nothing, on no news flow per se, except, of course, the fact that you had that commentary coming through. And, of course, it's the backdrop is a strong market in that sense. So 1450 plus on PB Fintech on some 3 million shares traded on the NSE so far. Ajay Tyagi is with us, Head of Equity at UTI Asset Management. Ajay, good to have you back on the program. Thank you very much for your time. I don't know if you have a view on PB Fintech, if you own it in one of the portfolios, on the business per se.
Prashant, as you're well aware, we can't comment on stocks. And by the way, this is one stock which we do hold in some of our portfolios. So I'll have to skip this one. Okay,
got that. I understand. The market itself, Ajay, I mean, is it, just a, in the initial stage, all the mark-to-market losses will become a little better. And then maybe one will talk about fresh new gains. That's a general kind of tendency. But what are your fund managers at UTI doing? What are you doing? Give us a flavor.
I'll give you a big picture view that we hold here at UTI. Of course, our team of fund managers are executing their strategies commensurate to what their own scheme objectives are, and therefore, different portfolio managers are doing different things. But the big picture view that we hold is that the recent bout of correction that we have had over the last few months have brought in large caps into a zone which we can call as a fair valuation zone. They're not cheap, obviously. They've not pierced the average valuations at which they've been trading for a decade or beyond and gone into cheaper territories, but at least we have gotten them into a band where we can start using our dry powder. So that's our view on large caps. I'm afraid the same view we don't hold for the mid and small caps. That part of the market, to our mind, is still outrageously expensive. People are only looking at the 20% fall from the top. Therefore, in a way, anchoring, the present price levels to what they used to be a few months back, and therefore getting excited about the fact that these stocks have gotten cheaper by anywhere between 20 to 40%, in some cases even beyond that. But to our mind, this segment of the market is still expensive, and we would wait for some more time to start using our dry powder here. Yeah.
Hi, where do you stand on IT? There's considerable amount of concern that the slowdown in US will impact the tech budgets, and therefore growth will likely stay muted for IT companies even in the coming year, and not the recovery that the analyst community was hoping for. What is the call that you all are taking on IT, large cap, mid cap, for the next 2 years?
See, unfortunately, anything to do with the US right now is as foggy as it can be. So, the views are changing pretty much overnight. They're changing every other week practically. One comment from the US president or, his team leads to a very different opinion that we hold about businesses that one way or the other are linked to the US. And since IT predominantly has its growth engines lying in the US, obviously this sector, which till about 2 months back, I would say, was looking extremely positive on account of the very steady and sure recovery that we were seeing in the US, is now, getting hammered down because of the uncertainty on account of the tariffs and, the growth slowdown that these tariffs can usher in for the US economy. So, we have to play it by ear. By the way, we don't really know whether the US will for sure. So first of all, we don't even know whether these tariffs are really posturing or these tariffs are going to be as harsh as they are made out to be right now. Maybe after a few months, we realize that this was a bit of a bargaining chip that the US administration was holding out. And therefore, to that extent, we start, seeing more surer commentary coming in from the US, in which case, IT gets back into a zone where people start talking about IT budgets being strong. In any case, the valuations of these companies are, in the fair valuation zone. So I would say IT is a sector we have to play it by ear. You can't hold a very strong view one way or the other at this juncture. You also, in passing, spoke about a 2-year view. The 2-year view on IT is positive. Look, I mean, there is enough and more which has to be done in terms of spends by corporates, both in terms of not just AI, but also in terms of cloud migration. So our medium-term view is positive. Indian IT vendors continue to gain market share. It's just the very near term which we are uncertain about. Yeah.
Okay, so the near term is a cause of perhaps a little bit of concern right now. Got that, Mr. Tyagi. Just take us through how you have modified or moderated your call on the capex-related side of the market, because I believe the house view is that while capex may revive, this may not emerge as the most loved part of the market. It was the big leader, right, for the last 1.5 years or so. What's your view now?
You're absolutely right. Let me also, reply by saying that the leaders of the previous bull market are usually never the leaders of the upcoming bull market. So we don't know when the next bull market starts to get found. Maybe we have to wait for a few quarters, a year or more, but it's unlikely that, the new bull market would be led by the same theme and the same names that were active between 2020 to 24. So that's point number one. On a more fundamental level, by the way, you're absolutely right. If you look at how the government is planning to spend its money right now, the clear predilection is towards reviving consumption in this country. So one way or the other, we are seeing more money being laid out and, more, I would say, more of these welfare schemes being rolled out. The government has realized that the multiplier effect that they were wanting to see on account of capex spends has actually not panned out. Now, economic theory very clearly states that capex does have the highest multiplier effect, but unfortunately, we couldn't see a commensurate impact on, let's say, reduction of unemployment here in India over the last few years, and therefore the government is keen to change its gear. That will have consequences on, growth in the entire capex sector, whether you talk about roads, whether you talk about defense, whether you talk about, power sector and so on. So yeah, I mean, even fundamentally, we are more inclined to believe that after a gap of a few months and quarters, there should be a consumption revival in this country. Income tax rate cuts was a step in the right direction. We're also hearing about GST rate cuts. If that were to happen, very clearly the consumption basket would be front and center. Yeah.
Okay. All right. Mr. Tyagi, thank you very much for that perspective. Good talking to you today. Thanks for joining us on the show. We look forward to more such conversations. By the way, as we move on, that's an interesting piece of news coming through for Mumbai Airport. This is our colleague Madiha reporting that the Mumbai Airport, which is obviously run by Adani's, they could be looking at, or they're at least proposing what looks like a fairly steep hike in the user development fee at Mumbai International Airport for local flights from zero levy. I think they're now asking for over 300 rupees, 325, and for international flights, 187 to be hiked to 650 rupees per passenger. Obviously, it's a proposal. It has to go through the regulatory process, and it'll have to be then approved by the Airport Economic and Regulatory Authority as well. More on this story in just a bit.
I remember Madiha also talking about how the GMR, for Delhi as well, GMR airports had proposed an increase in UDF. So
yeah. So let's see how this plays out. We'll quickly get to Nimesh in the meantime, talk about D Street Chatter as we're getting you more contours and more updates on that important story. But Nimesh is here with us as always with all the insights and the buzz from dealing rooms. What a good day, Nimesh. After a long time, I guess you would not be hearing complaints. How's the Josh out there? Is it high today?
Well, absolutely, the Josh is high, Surbina. Clearly, this is called a trending day, right? After a gap we've just built on, and the markets are at days high. And the good part is there is a lot of participation now in the broader market stocks. The mid-cap index is up nearly 2%. And a lot of individual names are buzzing in trade. A lot of the stocks are up 15, 18, 20% in today's market. So after a long time, we've seen such a big, a trending day, and a lot of individual stocks also participating on the upside. So clearly, that's something to cheer. Again, from an institutional flow perspective, for many days I've been saying that there is buying in the financial names, especially the private bank stocks. And again, the banks is leading the upside today. The index is up 1.5%. And a lot of flow seems to be very much active on the financial side and the private bank names specifically. Now we are at a very crucial resistance of 22,800. If that gets taken out and consistently if we close about those levels for the next couple of days, you might see further short squeeze and a further upside towards the expiry. So that's overall feedback. But clearly a trending day, and the fact is that there is a lot of momentum back in the broader market stocks today.
Okay, Nimesh, in terms of individual names, what are you picking up?
So the first stock on my list today is ITC Hotels. After a long time, some buying interest seems to be back on that name as well. The stock is up 5%. The volumes are on the higher side. And I believe one domestic insurance company has been an aggressive buyer in the last couple of days. So that's ITC Hotels, first stock. The second stock is Zomato. A big correction in that name from the highs of 300 to 200, 210. And now there are some buy flows at HNI desk. In fact, there is a very strong indication that maybe one large influential HNI investor has been an aggressive buyer in Zomato at this level. So that's the buzz there. The third stock is IIFL Finance. Again, a stock which has been extremely beaten down, from the highs there. The stock has actually recovered from in today's days from the day's low. And also here, I understand the selling pressure from a large FI seems to be largely over. And also for IIFL Finance, there has been a buzz for the last few days that maybe there could be some corporate development in IIFL Finance as well. So that's a third stock. The last one is First Source. Stock ended 8% lower yesterday and on very large volume. So there was a bit of a puzzle on what went wrong. Looks like there was a forced selling from one of the PMS investors that got sold yesterday. In fact, this month the stock is down almost 70%. So clearly there has been selling pressure from the PMS side. My sense is that large part of the selling got over, and that's where the stock was up. It was down 7% yesterday.
All right, Nimesh, interesting names as always. Thank you very much for that. We'll take a quick commercial break here. On the other side, we get you short-term trading ideas with our technical experts. We'll also address that user development fee hike which has been proposed by the Mumbai airport, run by, of course, the Adanis. Madiha will join in to fill us in on that story. Stay with us.
Welcome back. So markets are still holding on to a bulk of its gain, but we don't quite have. Yeah, actually, it's building on the game. 22,835 now. So pretty much the day's high. What a rock steady session. Mitesh is back with us. Mitesh, would you be comfortable sort of leaving long index positions open, looking at this kind of a screen? What's the final advice also on stocks?
So disclaimer will be we are leaving long index positions open. So, yes, I will be very comfortable. See, I think, very clearly, 22,800, the way, the ease with which it was taken out suggests that there should be more upside. Two, I think the bank Nifty, I was looking at a target of 49,500. I think it's reaching there. We had a swing high on intraday pivot basis of 49,550 if you take a closing chart, and 49,600. So I think that's the minimum target which the bank Nifty should do. And then in a good case scenario, even 50,450. So since the indices are very positive, I think, just maintain your long positions. There's no need to worry. I was only thinking that maybe 22,800 will, see some supply. But the ease with which the market has moved above that, and while you might still not get an average closing above that, I think, it suggests that momentum is likely to continue for next few days.
Got that. Let's also invite Jay Bala from cashthechaos.com on the show. Jay, from extremely oversold areas, we've seen a bounce back today. But are you skeptical from these levels, or do you think the bounce can extend itself? What's the near term and then a little longer term time horizon and the trade, and how you expect markets to play out?
Hi, Rima. Good to be here. See, I'm neutral on the market at the moment, but I'm not fully convinced that the low that we saw the early part of March could be a final low. So far, the market is moving up as anticipated. I had projected last week the market to bounce up to somewhere close to 22,750 to 22,900. It's here, and the market has come here, but the move has been with a seeming struggle. So that's not a best signs for bulls. And if you look at Reliance, that's also struggling. Even in today's session, it's just flatlining or even slightly negative. Again, that's a cause for worry for the bulls. But the main risk for the equity markets comes from the global markets, particularly from the big techs. And if you recall from our conversation on the November 5th, I pointed out that the Nasdaq had potential to clock a long-term top from 2001 to 2025. So that if that is what is playing out, we'll know in the next few sessions. I'd also posted on my Twitter handle just a couple of weeks ago that whenever Nasdaq breaks below its 200-day moving average, after 300 sessions of staying above it, it's invariably led to a steep loss. And if the subsequent losses exceed 3.5% in the next 1 to 2 weeks, it is actually done now, it's lost about 4.5%. It invariably, over the 1 year period, it loses about 20 to 48%. That has been the precedent before. But if this is going to be the case, and can Indian markets stay unaffected? That's the thing that we are watching. I pointed this out. Is so far when the US markets decline, money is seeming to be coming into the Indian markets, but it's a struggle. It's not a trending move. So that's what we are watchful for. I believe there is one more lower low to come through. If the markets get rejected from 23,100 or even 22,900, where we are very close to, that'll be a very bad sign. And I'll look to drop my neutral stance and go to a bearish stance.
Okay, so if the market, the 23,100 level is rejected, you think we break below the earlier low, which is 21,964, perhaps?
That's right, Prashant. So the medium-term outlook was the September end top at 26,277 was either two forms of correction, or one was a long-term top. So when the Nasdaq and the semiconductor index, which this rally has been propelled by the AA-led stocks, and the semiconductor index is saying that that's also clocked a long-term top, at least from 2009, if not from earlier. So with this background in mind, there is a possibility that if the earlier low that we registered in early March, if that breaks, this could stretch to somewhere close to 18,000. Subject to revision, but it's just a objective at the moment. But as of now, as things stand today, I'm being neutral, even trying to attempt some bullishness in the mid cap and the small cap space.
By the way, talking about Nasdaq, tonight you'll have NVIDIA's Jensen Huang speaking at an event, he's pretty closely watched, maybe a little lesser so than maybe 2 months back, 3 months back, when the excitement was all around AI and the big US tech stocks. But still, I expect, I guess, a lot of enthusiasm for AI spend and scope, etc. So again, I mean, something to watch out for. But that's later today during the US session. We'll take a quick commercial break here. The Adani Airport story in terms of the UDF hike proposal on the other side. Madhya is here. Stay tuned.
Welcome back. Well, just about 4.5 minutes to go before the day winds up. Jay is, of course, with us. Jay, so what's the sense? I mean, and quick check on the US market itself, which is kind of tried to sort of stabilize. So is the worst over, or is this, the proverbial dead cat bounce? What do you make of it, and what should the trading bias be?
Yeah, I'll start with NVIDIA because I had spoken about NVIDIA on the 19th of November. I had said that NVIDIA is likely to drop 50%, and it's already dropped 31%. This is eerily similar to what Cisco did in 2000 dot-com boom. In the first leg of the move, Cisco dropped 32%, and so it's almost an echo from the past. And I think the US markets have got at least one more lower low to come through, even if this were a correction and not a downtrend like I'm talking about. So that we could see another a limited upside, something like 2-3% for the NASDAQ tech index, and probably slightly higher for the S&P 500. And then we should see at least one more lower low. If that lower low seems to be a hard hit, then it confirms that this is most probably a very strong downtrend. And if it's a very slow move and that clocks a lower low in a slow fashion, that will probably indicate that we are looking at a correction rather than a strong downtrend.
Jay, any trades that you would recommend?
Yeah, I have got two picks today. One is a conditional one is a outright one. Dr. Reddy's. I've been bullish on the pharma space for since the COVID lows, and I'm slightly negative in the short term. But if pharma is coming back, Dr. Reddy might be the best candidate. Yesterday's strong move looks like at least tradable counter trend bounce. So a stop loss at about 1090 and remain bullish on it. And the next one is from the auto space. Escorts Kubota. It's developing an inverse head and shoulders pattern. It needs to cross 3067. So the third trade doesn't trigger before that. Don't preempt the market. Wait for the stock to cross 3067. Once that crosses on a closing basis, that will confirm the inverse head and shoulders pattern is in play, and a stop loss of 28.25.
The Nifty IT index today has moved in sync with the frontline indices, 1.4% higher on that index. What is it telling you after the recent correction?
Yeah, not a good sign, Rima. See, I think the Nifty IT index is likely to correct below the June 2024 low of about 26,000 and change. Because if you draw a trend line from the pre-dot-com boom levels of 1996, the trend line passes through the COVID lows and the June 4th low. That has been broken and taken out, and trading below 37,000 is not a positive sign. I think there will be a feeble bounce for the Nifty IT stocks, and there will be a lower low coming in the short term, and then further higher highs, and then resume the downtrend. So a little bit complex, and so basically I'm expecting further lower lows to come through in the very short term of 1 to 3 days time frame. I'm anticipating some bounce, but then selling to resume lower.
I have to say, it's quite incredible. There's no volume on the downside at all. No volume. I'm just looking at the broader market and what is down with volumes. Nothing. I can count three names. Hitachi, which is down 5.5%. There is Castrol, which is down 6%, and there is Gensol, which is down 5%. I mean, there's a Sharda Cropchem, which is down 4% as well. But you go down the list, nothing, no volumes.
And Castrol's gone ex-dividend, by the way.
Castrol. So yeah,
it's not even a real fall.
Yeah, so it's not a real fall.
I think it's just, and it was true even yesterday when actually market growth was negative. Gainers had all the volume, and stocks on the downside didn't have any volume at all. And today, of course, it's flipped 3:1 advance to decline ratio, actually almost 4:1, and everything, all volume is to the upside. Although Jay is still Jay is skeptical, right? 23,100 is that marker for you, Jay, and we'll chat more. So stay with us as we wrap out things. Just coming back to you. So 340 points on the Nifty, 22,850 very, very quickly. Last 2 days coming up nicely on the index. And the Nifty Bank ending 2% in the green. Small cap index strong, micro cap index strong, capital markets, real estate. These are where a bulk of the action really has been. Only one loser, noticeable news, and actually the newsmaker stock of the day, Bajaj Finance on the Nifty, that was the only one with losses in excess of 1% today.